Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the markets were relatively volatile as the dollar index, which measures the greenback strength against a basket of 6 major currencies, posts a fresh 10-month high, and that was at 105.94 and currently trades around there. In light of that pattern, the Australian dollar took a further tumble and now posting its second consecutive bearish day and closer towards that bottom side of the range, seen around 63.55.70. All eyes will be on today to the Australian CPI year on year, with an expected forecast of 5.2% with the previous 4.9%. A stronger number would give much talk that the RBA could raise rates by 25 base points, but still much to come, and let's see how the numbers unveil. Looking to the top side, the resistance comes in around 64.55. Moving on to the euro, market was negative and now posting its 6th consecutive decline. With the downside now challenging the level of 105.70, we could see further risk, that is towards the region of 105.15.45. We are getting oversold and the ADX is still relatively bearish, so there is room for another 50-point decline. Let's see if the market can actually get to this region and bounce, and if so, see a bullish correction back to that trend line, which is around 107. In light of the dollar index, as I mentioned earlier, trading around a 10-month high, the market is getting a little bit on the overbought side, so I do anticipate there could be a small pullback there as well. The dollar yen taking another brave step to the upside since breaking the level of 148.30. In light of that, there is much talk that there could be an intervention from the Bank of Japan, like previously seen up around that 150 area. Nevertheless, the market is still relatively firm and still pushing towards that top side, with the resistance seen around 149.40.45. And as I mentioned, towards 150 could be a bit of a whipsaw price action and possibly a downturn if we do see an intervention. Sterling, you can see here, trading for its 5th negative day and now closer towards its objective, which is somewhere around 120.70. I feel the market is very oversold. So now it's time to maybe reassess, and are we getting close to the bottom? Because if so, we could see a bounce from 120.70 and back towards its trend line, as seen around 124. The gold lost its shine overnight and plummeted, and as I've been holding a bearish view for some time, and along with that we did get a topside rejection that came into play here. We've been stabbed at 1,945, that the move could now see to 1,886 to 88. Reassess from there, because my call is still very much holding to 1,850, which I have done now for some time. There is room for the technicals. There's a bit of a trend coming through here to support the bear case. So therefore, let's see if the market can reach its objective, which is only about $4 away, and maybe even see a break there to reveal the next target, as I mentioned, at 1,850. A downside challenge came to a halt after hitting that key level around 88.35. And from the bounce, let's see if the market can continue. There's a somewhat hammer posted here that could see it rise back to 92. In light of that, though, keeping an eye on these technicals, I like the way they've shaped up. So therefore, I'm not ruling out the topside challenge, but I feel there may be another rejection from that 92 area. If so, it puts pressure back on the downside again. But still keep an eye on this range at 88 to 92 in the short term. Well, that's a wrap. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoyed the great start of the day.